JFD, just fair and direct.
Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 2nd of July 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So let me just quickly double check everything, guys. I mean, all the systems seem to be running fine. So yep, hopefully you can hear me and see me. Right, now then, like I said, before we jump into the charts, quick mentioning, or actually, we'll have a quick read through our risk disclaimers first. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, quick update on what's happening here globally. Now, of course, according to this source, the number is at around 10,700,000. According to other sources, the figure is much higher at around 10,800,000. So in the beginning of this week, I was telling you guys that in a way it will be, to be honest, quite interesting, I would say, to see if actually we will reach the 11 million mark by the end of this week. And to be honest, with yesterday's surge in new cases, there is a good chance for something like that happening, and maybe even happening by the end of Friday. So yep, of course, I hope you're all staying safe and careful, and yep, taking care of yourself. But let's see how all this is gonna impact the market as well. So for now, if we jump into the first chart here, now that's Nikkei 225. The index closed fractionally in the positive territory. However, it still remained below this downside line taken from the high of the 10th of June, and you can see that for now basically it's as I've mentioned yesterday, it's still stuck near this level, near this 22,125 territory, which kind of continues to act as a somewhat of a support level, because again it keeps on, let's say, even oscillating around it a little bit. So, but again, for now, we're still kind of taking a bit of a cautious approach here. We're keeping an eye on this downside line, because in order to aim for higher levels, we need to see a break of that downside line and then maybe a push above the 22,624 level. But for now, it seems not to be the case. I mean, it seems that the index doesn't really want to move higher. However, the same story is with the downside. It's not really willing to move any further south. So that's why we're stuck here a little bit, and we're just going to continue observing the price action and waiting for that confirmation break, either through the downside line, and then in addition to that a break above the 22,624 level in order to aim for higher levels, or in terms of the downside here from the short-term perspective, of course, a move below the 22,125 territory could do the trick here for more sellers. But if you're looking for extra confirmation, then maybe wait for a drop below Monday's low, which is around the 21,970 territory. So and then yep, could consider a bit of a larger decline here. However, we'll be very careful near the 200-day EMA and near this low of the 15th of June, which is around the 21,530 mark. So yep, keep your eyes on those two. Now then, the German DAX here, again, not much happening, to be honest, because yes, overall the index continues to trade above the above this short-term upside support line taken from the low the 19th of March. However, I mean, yesterday we saw the index closing slightly in the red. This morning, looking at the cash index, the index seems to be trying to make its way higher here. It's currently balancing at around 12,355 mark. So basically, it's above yesterday's close. However, it's still below this barrier that I mentioned previously, the 12,484 zone. We need to see a nice good pop above that in order to aim for slightly higher levels. For now, we're just going to continue observing, and we'll take a bit of a cautious approach here, and like I said, we'll wait for that confirmation break of this barrier first before kind of targeting higher areas. In terms of the downside, well, I mean, of course, maybe it could be straightforward here, but still we'll keep an eye on this upside line, and this upside line, if that upside line gets broken, then yes, it could increase the chances for this index to drift lower. But to be a little bit more on the safe side, we could wait for a drop below the low of the 15th of June near the 11,600 mark, and then yes, break below that would confirm forthcoming lower low. Also, it would place the price below all of its EMAs here, and yep, maybe further declines could be possible. But again, for now, we are still above this upside line, so we are still leaning a little bit more to the upside. However, we need that confirmation break above the 12,484 level before targeting higher areas. Now the Footsie 100, this one is a little bit different. I mean, this one's stuck in between these two lines, so we can see that the index is kind of coiling up a little bit. Looking at the cash index and where it's currently balancing at, the price is currently sitting at around 6,200 level, so basically still within this in between these two lines. The short-term upside one taken from the low of the 22nd of May, and the short-term downside one taken from the high of the 8th of June. So like I said, the index is currently still stuck in here, so we're still waiting for that exit. We're still waiting for that break of one of these lines before kind of considering the next possible directional move. So yep, keep your eyes on that one. Gold drifted lower yesterday, but remained above this short-term upside support line taken from the low of the 5th of June. This is what I was mentioning to you yesterday, guys, to keep an eye on it, because if the commodity drifts lower but fails to, let's say, break below this upside line, then yes, the bulls could still have a chance to push the precious metal higher. This morning we can see that the commodity is trading slightly in the red, and but still kind of remains above this upside line. So in a way, as long as it stays above that upside line, there is still, like I said, an opportunity for the buyers to go in here and move this one and move this precious metal higher. However, at the moment, probably we'll take a bit of a careful approach here, and we want to see how it's going to behave near this upside line, because in a way it's very close right now. It's testing it, and what we don't want to see is, let's say, we don't want to get caught out here in a break of this upside line, and if the the price starts moving lower, then yeah, we may end up testing even the 1748 territory, which previously acted as a fantastic area of resistance. But as I mentioned before, that we need to see a break of that area of this 1748 level in order to aim for let's say lower levels. But until kind of then, let's say all this area here between the upside line and this 1748 territory will be somewhat of a neutral one for us. We will just probably just stay away and just observe the price action. But as I said, if it starts dropping below the 1748 territory, then lower levels could be met. But again, for now, guys, all eyes are on this upside line. Let's see if it can continue providing support. If it can, then yes, good news for the buyers, and we could see this one pushing to the upside. WTI oil now, again, not much excitement for the past kind of 2 days. The commodities is just virtually unchanged. It's kind of moving sideways a little bit here. It remains above that 21-day EMA, which kind of acted as a very nice area of support, but below the 200-day EMA, which acted as a good area of resistance recently. So for now, we're just gonna, like I said, observe the price action here. We're not gonna do anything because, as I mentioned before, that in order to aim for higher levels, we would need to see a nice good push above the 41.61 level, and then we could consider the further acceleration to the upside, because such a break would confirm a forthcoming higher high, and yep, more buyers could be joining in here. In terms of the downside, we would need to wait for a drop below the 21-day EMA and also a drop below the 37.10 territory, somewhere around here, in order to kind of let's say get a little bit more comfortable with slightly lower levels. But again, we're not going to drag this one too much to the downside. We're just gonna target some of these levels, like for example the low of the 15th of June near the 34.38, or the low of the 28th of May, which is around the 31.16 level. But again, that's in terms of the downside, if we see a drop below this level right here. Now, jumping into a few other instruments. Now, for example, the Bitcoin. I've talked about this one yesterday, and I was telling you guys to keep a close eye on this 9,300 barrier, because in a way, if it continues to provide resistance, this could lead to another round of selling. For now, everything's kind of working out so far this way. So the 9,300 level continues to provide resistance, so let's see if actually the bears can pick up on this and drive the crypto lower. For now, like I said, not much changes from yesterday's analysis. We're still kind of keeping an eye on the same levels here. Like I said, the 9,300 level, if the crypto fails to move above that, then yep, another round of selling could be possible, at least towards the 8,620 zone marked by the low of the 25th of May, which also coincides with the 200-day EMA. Jumping into a few pairs now very quickly. So USDCHF. Now yesterday, as you are probably aware, we did get some data from US. So now the ADP non-farm employment figure came out as well, missed its forecast, and even came out lower than the previous figure. So basically kind of put a bit of pressure on the jobs market, on the US economy here. However, the ISM manufacturing PMIs improved and managed to get into expansionary territory. So they've not only beat their estimates, but also, like I said, got back into expansionary territory, which could have been seen as a nice positive thing here. But looking at this picture here, you can see that because the Swiss franc, well, actually both of these currencies are currently seen as safe havens, but probably this Swiss franc here is acting as a slightly better kind of safe haven, and due to the fact that we are seeing an increase in coronavirus cases, the market is currently a little bit on the cautious side, hence the sideways activity that we have been seeing here on USDCHF for quite well, from around mid of June. So in a way, as you can see, the pair is kind of stuck here between these two levels, roughly the 0.9425 territory on the downside and the 0.9544 level on the upside. So in a way, we'll probably take a bit of a neutral stand here for now, and well, we'll continue waiting for that confirmation break before kind of, let's say, examining the next directional move. Now, if we do get a drop below the 0.9425 territory, then this may open the door towards further declines. This may, of course, will initially target the lowest point of June near the 0.9376, a break of which could set the stage for a move towards the 0.9322 level marked by the low of the 12th of March. Now, in case this this pair reverses sharply to the upside and pushes above the 0.9544 zone, Yes, we could consider a bit of upside, however, only up until this downside line taken from the high of the 23rd of March. And in a way, because in a way it could, yes, push higher, it could break above the 0.94, 0.9544 level, move to the upside, test this downside line, but if it remains intact and if the pair struggles to overcome this, another round of selling could be possible. So something like this basically could be as I said, a possibility. Now, for now, like I said, we'll stay neutral and just continue observing the price action. GBP Aussie. Now, the pair that I talked about yesterday, and basically what I was saying yesterday, that keep your eyes on this downside line taken from the high of the 4th of May, because as you can see, the pair is already quite overstretched here to the downside. So since around the 3rd of April here, or actually the 2nd of April, the pair is kind of drifting lower, and basically the this downside line, which is taken from the high of the 4th of May, yesterday got violated, and we saw a nice daily, well, the daily candle kind of staying above this. So this way it increases the chances of a possible move further north, but as I've mentioned before, yes, it could travel higher, but for those who are more on the cautious side, keep your eyes on this 1.8137 territory, because in a way it could move to the upside here. It could stall somewhere here, could stall near the near this barrier, because as you can see here, back on the 22nd, 23rd, 24th, and on the 25th, it acted as a fantastic area of resistance. So that's why we would prefer to wait for a break above that level first before examining higher levels. And in addition to that, a nice good break above this could also place the rate above the 21-day EMA, where maybe more buyers could see it as a good opportunity to step in. Now, jumping into another interesting pair, NZD CAD, and finally we have our breakout above this 0.88 level. So that happened yesterday, and most important, the candle stayed above, closed above that barrier, and you can see this is the result that we're having today. This morning, the pair continues to accelerate. So now the next target for us is around the 0.8890 level. That's marked by the highest point of July 2019. So yep, for now, like I said, keep your eyes on that one. Like I said, everything's looking quite positive, but we're not going to drag this one too much to the upside. As I said, we're just going to aim for that highest point of July 2019, and then we'll take it from there. And that level is around the 0.8890. Now this leads us into Euro NZD. Now here the problem is that it's the pair here. As you can see, the strength of the New Zealand dollar is kind of pushing this pair a little bit lower. Now euro is on the weaker side against the NZD, and we're seeing this kind of move, this decline to the downside. However, the pair is currently stuck near this 1.3330 territory, marked by the low, the 22nd of June. So in a way, if we do get a drift below this, then yes, of course, this could signal a further decline, but we do have a strong area of support here near the lowest point of June, around the 1.7190 territories, which if provides decent support, could help the pair to rebound and move maybe back up. However, if this area breaks, if the lowest point of June breaks, then, well, of course, this would confirm a forthcoming lower low, and maybe we could start aiming for the lowest point of February of this year, and near the 1.6785 zone. So keep your eyes on that one. In terms of the upside, we would prefer to wait for a push above the 1.7589 territory, or even let's round it up towards the 1.7590 in order to kind of consider, let's say, maybe slightly larger extensions to the upside. But for now, like I said, it is where it is. It's closer to this, to the downside here. It's closer to these two support levels. So of course, first of all, I mean, even right now, it is resting on this 1.33 this 1.7330 territory. But if that gets violated, then yes, a further decline could bring the pair towards the lowest point of June, near the 1.7190 zone. And finally, Euro USD. This one is pushing higher. So as you can see here, this was a very good example here of these two pairs, which are currently on the stronger side, the euro and the NZD dollar. But still, the euro is slightly on the weaker side against the NZD dollar. So, but here, for example, in this pair, Euro USD is trying to make its way higher, as I've mentioned to you this week. Basically, we are staying a little bit on the neutral side here, while the pair is stuck in this potential kind of descending triangle pattern. But as you can see, because we don't have a nice test here of the lower side of the triangle, so that's why we're not going to really assume, well, not assume, but we're not going to take it as a triangle yet, because we would need to see a much better test of this area here, the 1.1168, and then a rebound, and then we could maybe aim for, we could consider this pattern as a descending triangle. But for now, what we're focusing here mainly are these levels as separately. So of course the 1.1168 zone, that's what we need to see, that's a break of which we need to see in order to aim for lower levels. But the pair is now pushing higher. It kind of this 21-day EMA, which I've mentioned this week, continued to provide support. Although we did get these overshoots, but we didn't get really a daily candle kind of closing below it. And today, right now, you're seeing a push a bit higher. However, the pair is still stuck below this downside line, taken from the high of the 10th of June. So we will wait for now, because we need to see either a break through this downside line and then also a push above the 1.1353 level in order to aim for higher levels, or we need to see a drop below the 1.1168 territory in order to kind of consider the downside, because such a move would confirm a forthcoming lower low, and yep, further declines could be possible. Now, a bit of data to watch out for today, of course, guys. Today we do have the initial jobless claims from the US, not to mention the non-farm payrolls as well, something that should have come out on Friday, of course, but we do have the United States celebrating their Independence Day on Friday. So yep, this data release has been moved to Thursday, to today. So again, keep your eyes on that one, guys. Like I said, it could be an interesting day, but be very careful. That's the most important thing. So I hope you found it useful, guys. Thank you very much for watching and listening. If you want to join my video later on, my traders tea time, as always, 13:15 GMT. For now, I have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.